We have a war in the Middle East. That's bad. That's going to push up the short-term inflation numbers high. Traders, the markets, they're going to take advantage of it. That's part of the bad part of capitalism. They're going to take advantage of these and actually push up things much higher than they should be. So you're going to have a huge spike there. So these readings over the next few months, that'll actually give us a bead behind the scenes of the oil play. But these huge spikes, you kind of have to look through them and say, okay, the next month or two, it's going to be brutal. But, when we come back into July, August, September, in the fall, what's going to happen then? The PCE includes all this other stuff, but the consumer inflation puts more weight on things that we buy, like oil and gasoline and things like that. Because a lot of analysts are going to come in and after the fact, they're going to say, whoa, these numbers are really, whoo. And then they're going to start to backfeed. Well, you're going to know initially coming into these, some of these numbers are going to be hot just because of oil. Okay, so the CPI in March, they're saying it's going to go, here it is, it's going to go from 0.3 to 0.9. Then they're going to say CPI year over year, March, because we have to include these numbers, 2.4 to 3.4. I told you guys these things are going to go over 3 and considerably over. So once you get the oil trade into all this mix, this is what you're going to see. So going forward, you're going to have some shock and awe in the markets because a lot of traders are going to know this. The consumer doesn't. And most of the traders don't want you to know about these things because this is how they make money. So we know now the inflation numbers are going to come in hot. They might even come in hotter than these because of oil. Okay. Mortgage rates, they're going to go higher today because of just this. As this number goes down, that's bad, so that's going to push mortgage rates back up to over 6.5%. Inflationary numbers this week, a little bit high. Next week are going to be bad. You and I know it. Let's see how the markets react. You're probably going to see the markets react in a bad way, but let's see how this plays out. My goal right now, or my expectations are, rates are going to be at 6.5, 6.6, right in that range soon. If there's escalation here, we could see 7. If there's some calm in the storms, we could get back down to 6.25. So when you go out there, if you're looking to buy, you're looking to refinance, you just need some help with all these and some guidance on when to lock and when not to lock, because this volatility is huge.